Olivia Bono-Voznenko for Modern Wall Street, and the topic today is retail, 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 for the most part. But without further ado, here's our favorite Thursday interviewee. Hello, Stephen Guilfoyle. How are you today?
Just fine, Olivia. How are you today?
I'm well, thank you. Well, before we get into retail, Stephen, you mentioned today in your note that oil was going to hit 44. How's oil right now?
Well, I wouldn't say I said it was going to hit 44, but I did say when it was trading this morning around 41 that I felt that it could be technically pulled towards 44. Based on that EIA report that we saw overnight, they felt that the glut in supply would balance out over the course of the remainder of the year, and it's been taken quite positively. Then, when we got to 43.5, a bunch of stops were elected, pushed the stock a little higher. I guess we're trading around 43 3/4 right now. Getting pretty close to that 44 level. But to be honest, I was looking further out. I wasn't thinking it would happen in half a day.
Well, we're going to call you a fortune teller, right? Now, getting into retail is the main topic of today. We've had a lot of retail earnings report ahead of tomorrow's big number. What do you think so far?
You know what's interesting? Yeah, we had a couple of nice beats, but the whole retail subsector, multi-line retail subsector, is up over 3% now. And the big story was Macy's plan to cut over 100 stores, which I think is fantastic. Reducing the square footage per possible consumer in this country is necessary for the brick and mortar retailers to get going. I think that's why you see, I don't know, maybe 20, 25 names up 2% or more within the group. As long as the rest follow suit, this is a very positive development. And I've been saying all along that you wanted to own retailers into earnings season and get out of them just before the numbers come out. Well, if you're still long some of these, and some of them haven't reported yet, I'm thinking maybe you want to hang on a little bit. Maybe this is something you want to really look hard at before getting out of those longs if you're still long these.
All right, so the reaction has been pretty good so far. Macy's did soar. Are we going to see any other stores do this, cut stores, and have a positive reaction?
Well, that would be my expectation. It seems like the right thing to do for Macy's, and if I'm a CEO or on the board of one of these other corporations, you've got to already be thinking it, because the numbers have been sloppy. Amazon and the other internet retailers have been taking your market share. You've got to be thinking this to get out of underperforming stores. And then you can refocus. If you have savings, then you can refocus on the people that are showing up at your stores, the shoppers you haven't lost. And you can really focus on that and maybe enhance your business. I think they all have to be thinking it.
Well, I'm definitely going to be heading to Macy's at the end of the month because it is going to be hurricane season. Got to stock up on those rain boots and raincoats. And you also mentioned that investors should be paying attention to this too.
Yeah, well, you know, the NOAA increased their hurricane forecast for the season today. They have ranges for named storms, for hurricanes, and for severe hurricanes. And they basically lowered the lower end of their range. They raised the lower end of their range for all three. What this does, it puts a little increased risk on the insurers. It maybe makes taking a look at construction materials and waste management. It makes those kind of things maybe possible investments that might pan out for you down the road, but it's going to take a few months. And it could actually increase demand for skilled labor in the Southeast. So, I mean, you might see a little wage pop down there for some people anyway.
All right. Now, Stephen, volatility has been pretty low, but we've seen some record highs. Are we in a typical cycle here?
I wouldn't call anything about this typical. I mean, obviously, valuations have been stretched due to perverse monetary conditions, but nothing's broken. All right, we're 2186 on the S&P. I don't think, although this is an all-time high or very close to it, I don't think anything changes technically until you get above, let's say, 2193. And even if we have something of a pullback, I don't think you have to really think about changing what you're doing until the S&P gets below, let's say, 2167.
All right. Well, Stephen Guilfoyle, thank you for being our fortune teller today. We'll talk next week.
Thank you, my friend.